Your own channel Quantum Math. In the previous video, we were discussing about the first chapter, that is GST, CGST and SGST. In this video, what we'll do, we will do some calculations and do some multi-step problems related to GST. A quick recap before we move ahead. In the last video, we have learned what GST is. Today we will calculate it. And here's the truth. Once you get the intrastate versus interstate rule right, you can solve any GST problem in less than 2 minutes. So let me prove it first. The learning objectives of today's video is calculating CGST, SGST and IGST on different transactions, solving multi-item bills with different GST rates, applying the GST chain, that is how GST moves from the manufacturer to the dealers till the final entity, which is consumer, solving problems involving both intrastate and interstate transactions. So let's move. As you know, intrastate GST and SGST both will be half, that is divided into two equally, whereas interstate we don't have CGST, SGST, we have IGST full, that will pay to the central government and later they will be dividing it into the destination state. So, and GST amount is applied on the selling price, not the marked price. Understood? So, this is something we need to be clear before doing any problem. Okay. First of all, whether the problem is related to intrastate or interstate, first step. Then what is the GST rate which is applied to that particular product? Then what is the selling price, whether there is any discount or any additional costs which were involved for the end product. So that is known as the selling price. So we need to apply GST on the selling price. Understood? Great. So what we'll do, we will do some problems now. First problem says a dealer in Delhi sold a personal computer in Delhi for rupees 28,000. So what is this? First of all, it is a case of intrastate because commodity is not moving beyond Delhi. So here Delhi and GST rate how much? 18%. Is there any discount? No discount. So discount is 0. So we will work on the marked price, which is 28,000 rupees. So IGST will be nil here because it's an intrastate transaction. So we will have CGST. How much? CGST will be half of this 18%. Half of the 18%, which is 9%. 9% of 28,000. How much will it be? 2,520 rupees. So this is your CGST. Similarly, SGST also calculated as 2,520. Got it? So now, is there any IGST here? No. IGST is for interstate transaction. That's why there is nil. No IGST involved in this case. Got it? That's it. That's it. Very simple, right? Very simple percentage problem. Moving on to the next problem. Dealer D bought a TV from the manufacturers for 20,000 and sold it to retailer R at 15% profit. GST rate is 18%. Same state, intrastate problem. Find input GST and SGST for the dealer D. Second is GST that dealer D deposits to government and the amount retailer R pays. This is a little tricky problem. As you can see, multiple inputs are there and we need to find a lot of different things. So we'll do step by step. Let's make it very simple here. So first of all, the manufacturer of for rupees 20,000 so how much is the selling price? Selling price is 20,000 plus 15% profit. 15% of 20,000. How much is that? 15% of 20,000. Sorry for that. Okay. So how much that it will be? 23,000. Total is 20 plus 3, that is 23,000. You will be knowing how I got 23,000 because 15% of 20,000 is how much? 15 into 2 is 3. So 3,000. So total amount selling price is how much? 23,000. Got it? So now GST rate is how much? You know that GST rate is 18%. So so this is a case of intrastate. So input CGST will be 9% of 20,000. How much he paid to the manufacturer? That is something. So for him, what he is paying to the manufacturer, that is the input GST. You try to understand this part very well. What is input GST and what is output GST? This person, dealer, is paying some amount as GST to manufacturer. Where it is getting originated, the product? Manufacturer. So dealer is purchasing from manufacturer and giving him some GST amount. That is the input for this dealer, not for manufacturer. Okay, so the input GST for dealer D will be 18% of 20,000 rupees. Got it? 18% of 20,000 is how much? 3,600. Okay, so that will be 3,600 half. How will you do this? 3,600. In this, if you divide equally, you will get IGST and CGST as 1800. Sorry, not CGST and SGST. CGST and SGST. Both are equal here and both are 1800 and 1800. Hope this is clear. So what was the question here? How much input CGST, SGST is for the dealer? Dealer is paying how much? 3,600. Out of that, half of it is CGST, half of it is SGST. Clear? Got it. Second part. GST the dealer D deposits to government. How much he will deposit? He will sell this to the customer, right? Now the dealer, what the dealer will do? He will sell this particular TV, what he bought in 20,000, he is selling in how much? 23,000. This is the selling price. On this selling price, again 18% of GST will be added, right? So the total amount that he will be getting is 27,140 because 23,000 is the selling price plus GST of 18%, that is 4140. 41, you can do the calculation. 18% of this 23,000 will be 4140. If you add, the total amount which the dealer is taking from the customer is 27,140. 27,140. Got it? He has. So what is the output GST for him now? This is the output because he is getting from the customer. That's why we call it output GST. For the dealer, we are talking about dealer. We are not talking about manufacturer. We are not talking about the final customer. We are only talking about the dealer here, who is in between manufacturer and the final customer. So now output GST is 4140 for this person. Correct? What he will do, he will pay to the government the amount which will be difference of this output GST and input GST. Amount payable to the government. I am not writing here because already I have pasted something very, very important. That's why I am just trying to save some space. So amount payable to the government is, for simplicity, I am just writing as amount payable as GST payable to government as output GST minus input GST. That will be 4140 minus 3600, which will be 540 rupees. 540 rupees he is paying to the government as GST payable. So, understood? Is this clear to you? Great. So, what you people do, you do similar type of problems which are there in the textbook so that you will understand what's happening here. Fine. So, now there is one more concept which is related to this output GST and input GST, which is known as the ITC. We will cover that ITC in the later problems, but here it's fine to know what is output GST and input GST in this problem. We will get to know ITC in the later problems. Okay, great. Move on. Simple problem, GST simple problem I am explaining here. See, one person is having a shop. He is purchasing the raw material of 1000 rupees and the GST for the raw material is 10%. So total he is paying to the supplier 1100 rupees. Got it? Now he is making a product and selling the same thing in 1500 rupees. Same 10% GST is applied and 150 of GST should be payable by the customer. So total 1650 the customer is paying to this business owner. Got it? So there are three steps here. First, he is getting raw material from the supplier. Then he is selling the same goods to the customer. Got it? So he is the business owner is in between. Whose shop is this? Furniture shop. Now the input tax credit. So what is the input tax credit means? Your output GST, what he is receiving from the customer, that is 150 is your output, minus the input GST, what he has already paid to the supplier, that is your input GST. If I subtract both, I will get a GST which is payable to the government. Similar problem which we have done just now. 50 I have to pay to the government. So you will pay 50 to the government because already you have paid 100 here and now you have to pay, you are getting 150 but already you have paid 100, that's why it is getting adjusted. This adjustment is known as input tax credit. Input tax credit. Understood? So in summary, input GST 100, output 150, GST payable is 50 rupees to the government. So why it is important to adjust this? Why ITC is important? Because government does not want tax on tax. So it allows you to use set off so that whatever you paid already should not be paid again. Understood? So there is one little thing which makes your input GST and ITC different. What is that thing? Not all the input GST becomes ITC. Why? Because some of the GST that you have already paid might not be eligible. For example, GST paid on personal expenses. Okay, you have paid GST on your personal expenses, that is not recoverable. Okay, some blocked items like certain luxury cars or some personal food or club membership, all these things you cannot claim again. So some invoices are invalid, such cases. So in these cases, you'll definitely have input GST. You will pay to the supplier. Supplier will not leave you. He will say, you have to pay the GST to me. So definitely he will take 100 rupees. But the input tax credit, the government may reject this, saying that no, this is invalid invoice or you are not eligible to get this ITC. So again, you need to pay that 150 full. So this is a rare case, but you should know that not in all cases input GST is equal to ITC. Those two things are different entities. You got this problem right? Great. Moving ahead. So one problem we will see here. Dealer X purchases article for rupees 8,000, okay, and sells to dealer Y, same state, at 1,000 profit. So 8,000 plus 1,000, in 9,000 he is selling. So now Y is selling to the consumer Z. So now what is happening? So many hands are getting shifted, and ultimately the product is reaching to the consumer who is consuming that product, consumer Z, at 2,000 profit. You got this? 8 plus 1, 9, 9 plus 2, 10,000 is the selling price of that item now to the final consumer. GST is 12% because, and it is intrastate, so 6% CGST, 6% SGST. Got it? So we need to find the ITC for this dealer X, tax payable by dealer Y, and total cost for consumer Z, and what is the output GST for the consumer Z. Understood? One by one we will do, you will understand it very clearly. So here I have generated this spec for this problem. Manufacturer is selling the goods at 8,000 to dealer X. Got it? So dealer X 8,000 he is paying, and additionally he is paying 12% of 8,000, which is 960, which is the inbound GST for the dealer X, not for manufacturer. Inbound GST is 960 for dealer X. Understood? He is adding that 1,000 profit and selling it to the dealer Y, which is 9,000 is the price now. And the dealer Y is paying 12% of that 9,000, which is 1,080. So the input GST for dealer Y is 1080, whereas the output GST for dealer X is 1080. Understood? His output, his input. Clear? Now dealer Y is again adding 2,000 as profit and selling to the consumer at 11,000 rupees. So at 12% of 11,000 is 1,320, which is the consumer is paying, right? This finally the consumer will pay the final amount. Here, here the output GST is 1,320 for this consumer, whereas for this dealer Y it is the input. Sorry, I got confused. What I said? Yeah, consumer Z's input GST is 1,320 and dealer Y's output GST is 1,320. Correct? Now, moving ahead. Dealer X will deposit to government. How much he will deposit? Because he has already paid this 960. He is getting 1080 from dealer Y. So he will not deposit everything to government. What he will do? He will deposit only the difference of the GST. That is 1080 he got. Minus he will do 960 what he has already paid to that manufacturer. He will subtract it, which is the input GST. So 120 is the tax that he will be providing to the government. He will pay to the government. Got it? So tax is only on the 1,000 value addition what he has done. Got understood? 120 is the 12% of 1,000 profit that he is getting. This is very important point. Dealer Y is getting how much? 1,320, but he has already paid 1080, so he will not pay again. So subtract 240. 240 is the 12% of 2,000 margin which he has already kept. 2,000 profit. So he is paying GST to the government on the only the profit that he is making, not on all the amount, because already he has paid some of the amount, right? So he will not pay again the full. But here the chain breaks. Consumer does not have anything called as ITC. We cannot go and claim to the government that we have paid GST, we want it back. No. So they will pay 11,000 marked price and 12% 1,320 total amount the consumer will pay. So how much it will become? 11,000 plus 1320 is 12,320 rupees she is paying finally, including the GST. So she will not get that back. Understood? So the government is taking from the manufacturer 960, what he has claimed, what he has received from dealer X, 120 from dealer X, 240 from dealer Y. Total government will get how much? 1320. Tax will be collected. Understood? So government will not charge again and again. They will charge only on the profits that the dealers are making. Clear? Clear problem? You got all the answers of this problem in this? Great. So now, these are a list of 3 to 4 problems which you have to do as homework and try to give your answers in comment box. Take a screenshot, try to do this and put your answers in the comment box. Okay. So I hope you enjoyed this video, and if you like this content, hit the like button, subscribe to this channel and share with your friends if you really care for them. Okay. See you. Good night in our next video. Till then, take care. Bye.